What's going on, guys? It's Tremaine here, the most disciplined day trader on YouTube. We're going to do a trade breakdown over my final trade for the week. You thought I was going to say for the month, huh? My final trade for the week. Let's get right into it. So, daily chart to kick off, we have an old new day opening gap between this candle's closing price and that candle's open. You can see we've traded into that this morning, and we came off of that lower half of the new day opening gap. So we're going to jump straight into a 5-minute chart, regular trading hours. So clearly we've gapped higher than where we closed yesterday. So it's reasonable to expect some measure of a repricing into this opening range gap. It doesn't have to go halfway if we've gapped this much higher, I think around 200 points or so. So large gap higher. I'm not expecting us to reach midpoint of the opening range gap until we reach that old new day opening gap first. So we open at 9:30. Trade down, trade up, form a short-term low, that sell side, run that sell side, and then we trade up into the new day opening gap. This was the trade I was looking for here, and then we sell off, repricing in some more of that opening range gap. Now, I want you to be mindful of, and this is something that ICT has taught, whenever we have an anticipated drawn liquidity up here and our narrative is bullish, we're expecting higher prices. If we ever have a large opening range gap like this, and we're looking for a draw higher, if we ever form a short-term low like that inside of our opening range gap, expect that to be ran out. I did take a couple of losses, well, one loss, because I forgot this phenomenon takes place very often. So we form a short-term low inside of that opening range gap, we leave, we run out that sell side, which is formed during regular trading hours at 9:30. We run that out, and then we rally. Okay, so this is something that happens a lot whenever we have a large gap higher. Okay, we need to engineer sell side. We need to engineer liquidity so smart money can buy those sell stops, which they do here. Then take it up to new day opening gap. Takes us lower. Okay, so be mindful of this low because we'll annotate that on a 1-minute chart, that sell side there. 5-minute chart here. This is now electronic trading hour sell side. So you can see we've opened at 9:30, bang around a little bit. We take out buy side, trade all the way back down, clearing out sell side. I slapped on opening prices. All right, if our midnight opening price is all the way down here and my drawn liquidity is that old new day opening gap, I'm referring to the 8:30 open. Okay, that has more weight to me instead of the midnight open because trading beneath the 8:30, that's a discount as well, like we do here. And I don't require it to reach the midnight open. So I'm comfortable buying below the 8:30 open, even though we're above the midnight open, if the narrative is that I'm looking for this here, and we're not expecting this opening range gap to completely fill in without hitting that new day opening gap first. So there's narrative there. 1-minute chart. I've added that regular trading hours sell side. Okay, this low here on regular trading hours is this low right here. Okay, so we trade open at 9:30 with this candle here. I have it labeled buy side liquidity, traders trap long. Now what do I mean by that? Well, there's traders wanting to go break out on this high because they see that as strength. So we have traders looking to buy above this high. So what does smart money do? They run it up there and they sell those buy stops. So anybody wanting to go break out of that long, they're punished. Sell side liquidity. Traders are now trapped short. What do I mean by that? Well, there's traders looking to go break out short on this low. Mind you, our drawn liquidity, and I said this in the live streams and Discord this morning, I was only looking for this old new day opening gap as a draw. I didn't care for anything going lower. This is what I was looking for all morning. Okay, that was my focus. I made that very clear. So we run up, taking out buy side, trapping traders who are going breakout of that high. We run it against them. Nice. Sell side liquidity. Traders want to go short underneath that low. We tag them in short, run it against them. Nice. As soon as we do that there, that is like a bang bang sucker play. We've absorbed that liquidity and run it against them. We've absorbed this liquidity, run it against them. Now the stage is set for higher prices towards that old new day opening gap. Also taking out regular trading hour sell side. We're during a macro, and we're beneath that 8:30 open, which is a short-term discount once we trade down here. Now this is when it gets busy. So 3 attempts for me this morning. one loss, one break even, and the third attempt finally getting the job done. All long attempts. So first entry was inside of this volume imbalance. I saw this as a breaker, low, high, lower low, clearing out sell side here. I like the idea of this low staying in place. Buying the volume imbalance, getting stopped here, no big deal. I'm looking for that new day opening gap as a draw. Bullish order block, using that as a re-entry, buying in here, adding more here. Don't take a partial above that high because I'm expecting new day opening gap to be traded to. NASDAQ says not today, pal, break even. And then once I see that we've taken out regular trading hours sell side here, traders are now trapped in short because they went breakout underneath that low. After already understanding what we did up here, the stage is set to go higher. It sounds like hindsight, but in the Discord I said if NASDAQ wanted to go higher, the stage is now set to do so because we've ran and took advantage of both sides of retail logic. So I'm showing my entries here. As we're trading up on this candle, clearing out the sell side, we're trading through the inversion fair value gap. I do not need to wait for a close above the inversion fair value gap, return back to it, because that does not always happen. If I'm anticipating this fair value gap to fail, which I am, I'm expecting this low to stay in place. We've already taken out sell side. We've already trapped them. We've cleared out regular trading hours sell side. I'm not expecting this low to get taken out. So I'm expecting this to fail. As we're trading and breaching through consequent encroachment, I'm buying it. I'm buying 3 contracts right there, market order. Second entry, pyramid, I'm buying 2 more. That same volume imbalance I used as an entry, that's an area of fair value. I'm drawing that volume imbalance through. I'm buying the high of it there. So buying 3, consequent encroachment of inversion fair value gap, expecting that to be violated because we've already done the dirty work and all the damage down here. Entry, using the same volume imbalance I got stopped out on prior. Buying 2 more there. And then a beautiful exit, almost nailing the high inside of that new day opening gap, which was my focus for the entire morning session. And anything after that I wasn't interested in. Nonetheless, a very nasty, choppy, disgusting morning, but it's August, okay? It's summer. That's a seasonal tendency. You also have an institutional order flow entry drill inside this fair value gap. What's the general rule of thumb? Whenever you have 2 fair value gaps like this stacked on top of each other, I'm looking at this bullish fair value gap here and this one here. The general rule of thumb is you want to see the higher one offer support. You want to see this one stay open. What is this here? What is that? This range of price action. That's a balanced price range. So would you expect this to be traded to? No. And I forgot to mention this in the last trade breakdown, but my entry on my first trade is, again, midpoint of the inversion fair value gap. My stop loss is beneath this down close candle. That's where my stop is. Once we get up in this region, I'm trailing my stop beneath mean threshold of the balanced price range, which is you take this fair value gap here, get that range, trailing my stop beneath mean threshold of that, because this is balanced. It's already been efficiently delivered. There's no reason to trade back down in here. Instead, we trade down on this candle, institutional order flow entry drill, bullish order block, 2 consecutive down close candles there. All right, and for those who like to see the proof and all that good stuff, TradeStation, personal account, connected, green dot, a little over $3,000 on the day. So not my best week by any means. It was definitely a little bit more challenging. A lot of re-entries, a lot of stop outs, a lot of break evens. It's just that time of the month, or that time of the year rather, August. I remember this last year, August is usually a little bit more difficult. It's just a seasonal tendency thing. So I won't be trying to go too hard the rest of the month. I'll kind of be taking it light. We're going to have more tape reading streams in the Discord and probably more paper trading, not trying to do too much in my personal account until we get to midpoint of September or whatnot. But that is it. Discord members, remember there's no live stream tomorrow on Friday. I will be traveling. We'll be back live streaming Monday morning at 9:15. Everybody else, YouTube family, love y'all, man. Appreciate y'all watching, and I'll see you in the next one. All right? Peace.